Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 475 edition of Invest Data Trading Academy Live with Ambrose. Yes, I will tell you that the global stock market has opened on a misdirection. Yes, you can see that the threat of tariff hike has pushed most of the money economy inward to think how they're going to cope with the president-elect administration. Already, he has started plan to enact on how to work to increase the rate, and this has also threatening the trade partners of US and also US economy itself. The consumers already also shaking head that this likely also to kind of trigger inflation again in this direction. All eyes open to see what the new administration of Trump will be starting from January 2025. I think the global economy and also economic managers of the different mature economy, Africa included, are watching to see the world, the direction of policy of Trump, has been apart different set of the economy and put industries and also put part of the economy where they will kind of collaborating with, at the same time where concession will be given. All these are what the new president-elect is coming with, and most of the economy are also waiting to see how they can negotiate their way out throughout this. But good thing is that I'll tell you that the Asia market, as we speak, is also looking a bit weak and downward, despite other markets like China market are trying to shake out the fear of Trump threat. Already, we see that the Chinese market is also looking up, while some Asian market also are missed. But if you look at generally on Asia market, all the region we are seeing a mixed market, while some of the stocks are down in that region. But I'll tell you that as fear continue, there are some also economy or countries that are also cutting rate. So that New Zealand have cut rate with about 50 basic points this period. But while others like Europe is waiting to see how this new proposed tariff by uh, uh, planned let's say planned tariff by Trump administration is going to affect their own economy. These are the things that are going to many of them are looking. Even as a Fed also is set also to cut rate with about 25 basic points in December. Expect this also to slow down a lot of things. But I believe that as Trump comes on board, and also seeing that we have seen the secretary, the Treasury Secretary that have already appointed, how all is going to shape and how it's going to manage what is happening in terms of geopolitical tension and crude oil production in the market. We are seeing that the commodity market is also going up and down. We see little stability in that commodity market yesterday and today as it opened on a stable as a result of all the impact of ceasefire discussion between Israel and others. These are the things also ahead of OPEC meeting that is coming up on Sunday. This week. And that's the thing that also shaping the market as we speak, especially the commodity market. But for Europe market, we're seeing that also, it's expected that this mixed trend will continue Europe market because of what? Because of that managers there digesting what is the coming, that what is coming from the new president-elect in US, and also what's also happening in the economy, knowing that Germany, GDP and also economic data are not looking too strong. Wow, yes, they cut rate for almost 3 times in that region. ECB, how is it impacting other economies there? We're also seeing that in UK, which is what's that inflation is also raising its ugly head, which is also going to threaten what this unitary consumption and also spending. These are the things that we're looking at. Yes, all we are seeing trace of inflation, but putting that as oil remains relatively below $75, that's a plus. But with the coming outcome of OPEC meeting that is coming on Sunday, what next will we be looking at? These are the things that I believe that is also going to shape the market going into the new month. Don't forget that this is the last trading week for the month of November. We expect that it's going to shape a lot of things to usher in the what we call the Santa Claus rally that comes in the month of December. But we have seen the trend of this month, of right from the beginning of the month to this, as it's winding down gradually. For investors, I think that yes, despite all the threats, we have seen that the post-election rally has also continued in US. That most of the stocks on index are hitting new high, despite also some investors taking what we call a defensive position, also from exiting, expecting that market will crash because of expected the policy of Trump come next year. But we are seeing all this in playing out right now because every investment is against the future. Investors are looking at how they can navigate within all these sectors and remain in profit. That's why having a balanced portfolio of equity, fixed income, and other cryptocurrency is very, very important at this time because seeing what is happening in in the market economy, all eyes are seeing what is going to happen at the beginning of 2025. Also, we are seeing that the reverse reading of third quarter, US gross domestic product data that is due later, today, being in the midweek to give us more insight the state of the economy, and that also will give us what as we are seeing that Fed is planning to also to still cut rate in their December meeting, which is last for the year. These are the things that we're also going to shape all activities for at the end of the day. But let's keep our finger crossed and see that we all focus eyes still on what is PCE, price index also coming also later also today to give us more insight also what is happening in this environment. I said earlier that when US catch cold, when US sneeze, every other country catch cold, this trend is still happening. That's why I think that the market broad sentiment remain cautious after Trump announced a plan to impose more tariff on China, Mexico, and Canada. And these are the trade partner of US. If ordered, automatically we are going to see that this also will trigger a new high prices in that economy. These are the things that is it for the interest of the economy or for the interest of this political ambition, or that what the investors are going to navigate through, and also the consumers in that environment. These are the key things that we must pay attention to as a trader or investor, that what are the factors driving all this so that it will help you to make what informed investment decision. But I believe that the purpose, the proposal that increase is important that every, not apart from the country mentioned, Mexico, Canada and China, every other country will know. It's the time for them to look inward. We know the period of the first period of the Trump administration. Trump went into concession with a lot of country, but I think Trump economy was so U.S. economic expanding. But you can see that with this recent government, that the economy of U.S. has also been struggling. But see, since it's coming back, but with the move of a trade tariff and all the, if we continue that direction, we might see this also affecting the global right decision, sorry, that will help us to buy right and sell right in the market. It's very, very key. So that we have this at the back of our mind when we are trading, that we will not be, will not trade against the trend. We must understand what is happening and also follow that trend immediately. Once you follow the trend, I'll tell you that you will be in better position to get the right information when you are trading with what we trend. That's why price action is very, very important when you are trading. And also we're going to see discuss how to trade what economic data and reports is very, very key, because right away we are seeing that all eyes in different markets focusing on what on the third quarter GDP, who just were released into our market recently. We are seeing in the market economy. Also, inflation data also will be coming to guide and also give you policy margin index also to guide to see, especially as we are entering the festive period in December, where we see demand of goods and services also will be on a rise. But it depends which sector benefit from all this, and also this policy that was present, or the data that were released, which sector is it reviewing that there's a potential, which sector is driving the growth, and how can you get to position in that line. It's very, very important as a trader or investor whenever you are in the market. Let us not just testing all this when we are trading, because it helps you to make informed investment decision anytime, any day. You must pay attention to it so that to guide you, so that you know what you are doing when it comes to what investing or trading. Yes, right away before we go into looking at the trading economic data and the report, we want to look at what is the state of the market as we speak. It's very, very important that we go into that direction to know what is the state of the market right away. That's why it's a live class, so that you know exactly what is happening before we now start looking at the prices and index on the chart. For that, let's know what is the market doing right now. As we speak, market is down in the red. Try to kind of short leave the kind of signal of the band I saw yesterday. I said we must confirm whether that trend will continue today. We saw a good bullish hammer here yesterday, but this morning we can see that that one was dashed. 5 minutes dash. We saw the life of Aradad losing their temper. That has weighed the market down. even when we are seeing some buying position in others, this was for put because of the word the weight of the stock. Also, profit taken in some other stocks that have done rally recently is what we are seeing in the market as we speak right away. Yes, if you look at the market now, say the market is trading 79,282.13 basic point, down by 357.75, in the red. That's translated to a percentage of 0.4% in the red as we speak. But also, if you look at the market market breadth is negative. We are seeing that 19 stocks are on the red, that is on the loser chart, having 19 losers and 15 stocks gaining at this hour. We start from the top losers now. We're seeing that John Holt is leading by 10%, Aradad is followed by 9.5%, Tantalizer is also down by 9.4%, while Me and Baker is down by 8.8%, and I think that Prestige is also down by 7.7. These are the top losers. On the gainers chart, I think that Sunu Assurance is leading by 10%, Guinea Insurance 8.2, Dark Communication 6.6, NASCOM is also up by 6.2, and was in Sovereign Insurance. If you understand the level of insurance sentiment, out of the top 5 gainers, I think that 3 of these awards are from insurance sector, financial sector. That's why we're going to look at how to trade with what macroeconomic data and also this report that comes. And what I'm going to do, we'll discuss more on Saturday, in the Q&A. But today I'll just give you little in to see how you can use those data to make informed investment decision. In terms of trade volume or activities, I think that the new limited company is one leading in terms of volume. That traded so far 372.2 million shares at 5.74 kobo. That's what we call a hardcore. That means HM core. This is the name of the new company that has moved from 3.84 kobo listed to almost 6 naira. Now profit taking at least double. We are seeing volume, which also tell you that at times you are seeing this volume at the peak, a sign of what the end of the party. But also we wanted to see more data and where they are going. As also they're having a board meeting this month on the 13th of December to tell us the projection for the year 2025, and it's what the board are looking for. Followed by Japo Gold. Japo Gold have traded 108.8 million shares at 41 kobo, and UBA also traded 14.1 million shares at 31.55 kobo, and Transcorp have traded 12.4 million shares at 4.70 kobo, and Prestige Assurance traded 11.9 million shares at 84 kobo after testing a high of 92 this morning. So profit taking pulling the stock down. This is the state of the market right now to speak. Yes, for me, the market pulling back we have seen is not also because of what that the sellers, investors or market players are market players are using data that was released recently and also the outcome of what MPC meeting to take decision. And don't forget that is why I said you must pay attention to all this data or economic event. Yes, we have seen economic event that where every 2 months you see the central banks of the world sitting to adjust, sitting to make adjustment on the interest rate to guide to see what interest rates are done, especially when they try to checkmate inflation. But here in Nigeria, we have seen that the CBN have also increased it for almost a year from January to date. We have seen no impact on inflation. Inflation is hitting high as at the end of October. Inflation was reading at 34% at that moment. It tells you at the end of October, it tells you that the impact of this increase also have not done more because the inflation today is not a lot of what too much money in circulation. It's a lot of what systematic issue in Nigeria, insecurity, and because especially with also policy in the FS market. FS market continue to oscillate as we speak now. I think that estimate is about 1,720. That is also already imported inflation. You can't do all this and if you want to take in inflation with high interest rate. Automatically, the CBN and the macro and the MPC committee are just trading Nigeria economy to attract foreign investors and not attracting just first money because on the current economic situation, the environment will not see serious direct investor coming to Nigeria to invest. They can only promise knowing that the environment is not conducive. Now the local one is operating, you are not sacrificing them at the expense of what want to bring the foreign flow by raising rate. Automatically, that also will put the economy on the tight corner. What we saw at third quarter GDP was not a soft growth. You can look at it driven by just only the service sector majorly. That is that other sectors like production, agriculture are sick already. You can see that they are declining because of a policy direction of the government. That's why our economic managers have to sit down, as we go into 2025 resume to kind of review all their policies to see how this policy can also be put in the right direction so that it will impact the economy where they are what they are managing. First thing that yes, that as a trader or investor, economic data gives you an insight of where to put your money. Especially when we saw the Q3 numbers for what for most of the companies, we know that yes, number that came from the financial sector also which is also a major contributor or booster of what of the Q3 GDP as we speak now. I'll tell you that this service sector recorded a high contribution to what to the GDP figure for third quarter. This is a good news for what for the market. And I tell you that the financial institutions which made is the major driver of this financial sector. We have a positive growth in what in the service sector was driven majorly by growth in what in financial institution and the insurance subsector. This financial sector also is the real, in the real, the real terms in terms of growth is about 31.92% in third quarter, increased by about 1.55%. Compared to what the previous quarter, where we saw the insurance sector also was about 19.8.1% in that period under review. This is that what this sector is also doing, and we are not interested. We are not also not that we don't know what is driving it. Yet the high interest rates, we have seen so far, and also innovation of exchange rate as well as the float of what of FS has also enhanced the financial sector performance. I won't lie, it has made them to post all these numbers we are seeing. You can see also what is happening in transportation, even with the high cost we are seeing because of cost of fuel. Also, it's also contributing. That means this is time for economy to look at how can we take advantage of what is happening today to reform the economy so that the economy will not be drifting to one direction. Yes, oil sector, despite the investment there, all the security, all the money invested, crude oil production has increased marginally, but these are not pushing the GDP because of how are we turning all this one to activities. As we speak now, the unemployment rate is on the high compared to what we are seeing in inflation today, about 34 on the wage inflation. We are also seeing that cost of borrowing has increased with the recent 25 basic point hike in rate from 37.25% to this. I think that you must look at flow of funds is very, very key. That's why as a trader investor, having a balanced portfolio is very, very important. But now I've said it, now you are seeing the sector that is driving the GDP and also the outcome of MPC meeting, which sector go to benefit from. That's why sector rotation is key. I would say the people that follow me on all different fora where I talk, I think that sector rotation, if you have like no sector is a darling sector that you can hold. Policy of the government, either physical or monetary policy, has a way of changing sector direction. Also have the state of also adding kind of prosperity or kind of a boost to some sector. You can see that what is happening in the monetary policy is also impacting positively on the financial sector, including banks and insurance, non-other financials. All of them are benefit from it because of what activities there have improved because of policy direction of government. Yes, also expect that fiscal authority also can see that Trump has already given them clear that those companies on the exchange are likely to do well in US. Why? He said he's going to cut tax, corporate tax to boost the bottom line of this company, also to so that they can give more to the society. Also these are things that you need to do. What are you doing to encourage there? Is it how to increase tax also? Is the content tax is a boost for the economy? But yes, because of increased tariff, they must also experience what inflation because bringing those goods to US. Because if you are paying high tariff, you're going to pass it also to consumer. These are the things that we need to have. You must know the sector or the industry where you have a positive sentiment on, and also government policies also important. That is how you should kind of position your portfolio along with. But I will do more of it by bringing them one by one, those sectors and the companies that are also leading that sector. We'll be doing this work in our coming Q&A section on Saturday. But I've given you an insight to what it means for you to work to realign your policy, your portfolio in the direction of what, in the direction of the sector that is leading in terms of performance. We have said it's not in use again that it is that sector that drove or kind of boost the GDP that we saw for third quarter. Then also we are seeing that the outcome of MPC meeting where rate is hike again, which sector will be the kind of a beneficiary from that. Which sector also going to hit from it? I'll tell you, non-performing loan will increase, or I mean the defaulters of that when the banks also increase, or how the banks are going to make up with it because they are making these are things like looking at which sector will be affected because when you increase rate, when the defaulter, most companies will start shorting down. These are the things that we should look at. Like I said earlier, I will sacrifice this economy to attract foreign investor, or because if you are selling your private sector down to attract those hot money that you're going to say, come in and invest your treasury, come in and spend your money and go back. they are not developing your economy. But the private sector that's running here are the one employing your people, engaging them. But we are using policy to put the corner. It's a time for us. But the good thing is that as inflation is also on that day, how are the the corporate managers taking advantage of that inflation to also remain in business? You can see it also in the numbers. That's why as we sit down as an investor or trader, we must look at all this and say which sector will I start building my work, pushing my portfolio to, and at the same time ahead of all this end of the year seasonality, and also Q1, any peak that come with what, any peaks that come with what, that come with dividend income. How can you position ahead of it? Which are those companies that will give you 100% return, 200% return in 2025? I will tell you that as we are preparing for Invest 2025, already those stocks that will give you 100%, 200%, I also be pressed out already for investors. That means if you are not registered for that event, it's time for you to go and pay for the event. Why I say so is that you can go online and see the testimony. We don't need to come here and kind of say, well, showcasing, you see for yourself. Figure out like that for the started, master class or started invest data for 2012. All our performance tests of top picks are there. Don't need to come here and be, telling you. No, you see for yourself. And also people that are also that are involved, that are participated, also give you the testimony of what they have seen and what they have heard and what they have also make at the end of the day. We look forward to see you for that. It's about 7. This is an opportunity for people to buy on 30th of November. All the window, all the discount window will close for both members of buy and sell signal and other. That means at that from 30th of November, every payment will be what at the full cost of what of the program in 2025. Where 8 professionals, traders, these are people that are trading live, that are making money. They have no data at their fingertips. They're going to sharing with you how we are going to take advantage of what in 2025 because of what is going to happen in global economy. Take down here because already most of the market economy are just how can you, look inward and take advantage of what sectors and also what's going to share in that in different investment windows. But we don't only just stop in that kind of class. We should go to a property, go to energy, everything, fixed income market, talking about treasury, all of them we discuss, the bond we discuss in that class. Without you can take advantage of and know where you stand and know how to have what a balanced portfolio for 2025 and where you're thinking of making 100%, 100% in some position you're going to take early after the class. These are why you should also make downtown to be available in this like anywhere in the world where we are making 100%, 50%, 100%, you are above what inflation. And that is what we're going to show you that inflation will not be a problem again because you are doubling money. But if you are still in those physical market where your real return is still negative, you are still struggling. That's why you must come to this investment 25 and take advantage of what information will be shared and also take action. Not just comment, you must also take action at the end of the day. Yeah, quickly time also I've discussed about how to invest with economic data and the report. Now we look at live market now to see. I said earlier, if you look at the chart here, that is still coming down. We can see that there's a major strong support level here around the 97,020. You can see it here. Fine. But let's see whether if this resistance here will turn support this hour because it does sign of yesterday the market is about to run, even when they announced the high grade, we saw that people were still buying. But this morning, I think that people are taking position, trying to rebalance their balance, to try to digest and analyze the outcome of this MPC meeting. What is it? What 25 basis points in the midst of what any season, midst of what we call seasonality and also Santa Claus, and also any season in first quarter of 2025, starting from what January, where we are seeing on the data account. These are going to shape the market. Where are you going to go for fixed income market, where you are thinking of 28 to 24% for the next 1 year, 304 days in treasury, or we are going to take position that even in less than 6 months you are making 100%, and even in that 1 year you are making 100%, 200%. We are going for position of 23%, 28% for for a whole year, or 100%, 200% in a whole year. Yes, there's higher risk in equity. We know that, but if you can take calculated risk and invest rightly, you also be smart. But that's why you need to join us in this class. As we are saying that market right here is still on the downtrend, but we can see that volume is coming because of we saw what is happening in the newly listed company Paul traded so far, and that of Japan Gold pushing the volume above average traded volume. Like you can see it here, which we have seen in the last 3 days. You can see that you can see it here. That trend is still very, very strong. But market, at this point, let's see where the market returns. But I tell you, as the month of November is coming to an end, as we enter into the stay back from first week after first week, for second week, we start seeing changes in the market ahead of what? Ahead of the Santa Claus, or Santa Claus can even start as from the second week of the same buy. We need to position now that the market will buy. It's opportunity to buy into what into value as I listed people. But looking at this here, let's look at the other indicator that help us to analyze the market to see what the market is doing. Even when our time is fast spent because of I want to share this so you know the state of the market. I'll very quickly just take 3 minutes or 2 minutes to share this so that we can now call it a day. You can see originally you can see that the the market is below the T line. Say that that's a sign of weakness already. You can look at it here. Pick one. I don't want to waste our time. Pick one here. If you look at it now, you can see the market is below the T line, but on the high volume, the speed of the rebound is very high at this point. After we have seen this signal that failed, but I tell you that the rebound is also on that way. You need to also pay attention to that as you speak. It's very important. Yes, you can see that money flow is also looking down. You can see that MACD is also looking down. Sign of weakness also. But money flow reading around the 30. Money flow reading around the 36, 37. Also for me, it's also low because it's not above 50. But as it coming to above 50, it's going down because of this days of what or sell off or profit taking or possible reshuffling ahead of end of the year. But I tell you, it's time to buy right. As money flow is leaving, money also going to come back to the market. Buy individual stock, we are seeing money flow entering. You see money flowing in and take position for the end of the year. It is the right time to buy into good stock. It's very important that we have it at the back of our mind. We saw some profit taking in some stock. Let's quickly look at those stocks that are leading now. But those that are leading, consider most of them are stocks that are, let's start with NASCOM now. That one I can quickly say, let's look at what is happening in NASCOM. Yeah, this is NASCOM. Let's look at what the chart saying on it. Charting now for the past 2 days now, you can see what is happening in NASCOM right away now. See money flow is also above 50, 51 now 30. MACD is just turning bullish now on the day chart. Then if we go for 1 hour chart, you can still get a bigger picture. On the 1 hour chart, you can see that profit taking also leading the stop, but it's still dragging. You can see that it will keep down rebound, but I can see it here. But buyers are pushing down, even sellers bringing it down, buyers are putting it up. Then you can see money flow looking up here. MACD also sharp on what on a 1 hour time frame for that stock. Let's look at 2 hours time before we look at the other stock. You can see that it's trying to resist decline, but now also don't forget that this also like a resistance. You can see it here for the stock. For this 2 hours, you can see once a breakout of this level, that also give another. MACD is already bullish. Money flow to this side, that fund is still entering the stock as we speak. Finally, look at the 4 hours chart before I go to Dangote Sugar. You can still see here, you can see fund entering that stock for 4 hours. MACD has given us a good sign for the stock for 4 hours and time frame. For me, it's a good one. Let's quickly look at what is happening in Dangote Sugar. It's very important. Look at what is happening in Dangote Sugar. So we can also look at the Honeywell before we call it a day. After 1 minute, even when I said 3 minutes, we have to look at. You can see that also strength is gradually returning to the stock. You can see that it's trading above the T line after touching as low as what 28 naira 50 kobo. You can see it. Money flow is trading 65.7. Good on 4 hour chart. For me, it's a good one. Let's look at 1 hour chart for this Dangote Sugar. Yes, you can see it here now. In between below and above the T line. Here, try to rebound back to trade around 34.45 now. But money flow is looking down sharply. You can see it here. MACD is also bearish on 1 hour chart for the stock. But on the day chart, let's look at what it looks like. On the day chart, it's trading above the T line. Strength and the money flow reading 67 and MACD bullish on the stock. If you look at Honeywell, and see, I show you more of consumer goods. What is happening? You ask Honeywell. What is happening? Why are you looking at these stocks now? I see potential in most of the stock in that regard. That's why I need to look at it after that I can get full meaning. Honeywell here. Honeywell flower. You can see Honeywell flower trying to resist that. This is a good sign you are seeing. I think this for a day chart. You can see that money flow still looking at that 76 sharp. MACD is still bullish. If you look at 1 hour chart for that stock, you can see on 1 hour chart, they also try to resist decline. Tuesday here, 2 days now you can see we are trying to break out around 5 naira and 5 naira and 480 the price. For money flow is looking like I can see there around 37. MACD is also bearish on 1 hour chart. We'll quickly look at the 2 hour chart on Honeywell before I call it a day. And that will be the last chart for today. Anyway, you can see for 2 hours what is doing above the T line, but a money flow looking up. I know why I said look at time frame will guide you to know exactly what is happening. This trend are uptrend from here, set will remain above the T line. Once you see, and also market is looking want to see any announcement from the parent country that has about 70% of the stock. Put your eyes on this stock and invest wisely for this end of the year. On this note, I say thank you. See you hopefully on Friday. Bye. God bless. Bye.